Well, good morning. It's September 3rd. Hope you're having a great Labor Day weekend. The end of another week here. Let's dive into what's been happening at asset class. Well, I'm coming to you this week from Ireland. Just returned to Europe for a couple of weeks. In preparation for the Signals conference, we're getting together as a team just to get the final touches, put the fit and finish to our presentations and demonstrations with all of the great content that we've got for Signals. Just as a quick reminder, I'll put a link in the comments here to the Signals event, particularly if you're in New York at One Liberty Plaza on the 3rd of October. We have the Signals event. We'd love to see you there. Great anticipation for the event and lots of new announcements coming up, so very exciting stuff. The other thing that's quite encouraging to see is what's happening in the fundraising market. So we're certainly seeing a number of our clients start to move towards raising new funds. It's interesting to see in certain market segments, for example, retail, multifamily, where perhaps the capital stack of many of the original investments are being challenged. There's distressed opportunities that are out there. And so we're seeing new funds come to market to take advantage of that. Also interesting to see what's happening in the retail sector. Many people, I think, wrote off the retail sector. Certainly during the pandemic, it was a very challenging time. But post-pandemic, there seems to be an uptick there. And so some very positive signs in terms of what's happening in retail and the commercial real estate related elements of retail, despite, as I say, despite the challenges that came with the pandemic. Certainly some uptick there. But that's encouraging. It's great for us to be able to help companies that are embarking on new fundraisings. If that's you, if that's something that's on the horizon for you, please come talk to us at Asset Class. We have a completely digital end-to-end process for onboarding investors, for exposing them to the fund offerings, taking them through the subscription documents in a compliant manner. And indeed, once they've been onboarded and invested, a range of tools for your investor relations team to manage that ongoing communication, everything from capital calls to distributions, etc. So do come talk to us. So also this week we saw the announcement, finally, that there's some IPO activity with Klaviyo and Instacart announcing their imminent IPOs. The important thing about the IPO market, of course, is that it's the best form of price discovery, meaning you get a chance to see what the market is willing to pay for companies of that nature, enterprise software companies. And that price discovery is what is either going to kickstart or potentially cause additional pause for those venture capital companies that are looking at potential, not just the VCs, but indeed the companies themselves, looking at the markets for their own potential IPOs. So it's interesting. It's clearly been a very challenging market since early 22. We're now coming towards the back end of 23, that almost 24 month cycle needing to pass through before companies felt comfortable coming back to the market. So watch that one with interest and see if that is the start of the next wave of public offerings. I think that is important. It's kind of a marker for the industry to determine what to do next. Clearly, without exits, investors, LPs, are becoming, let's say, more demanding, or at least demanding more insight into what's happening with their investments. And again, without those liquidity events, it's tough for that cycle of further investment to continue. So we'll watch that one with interest. So let's hope it's a sign of things to come. Now, we've also spoken recently about the changes that the SEC have implemented in recent weeks, in particular relative to the ERA and RAA markets, and the impact of those changes really centering around things like fee disclosure, preferential treatment for investors, things of that nature. And as I say, we are going to do a deeper dive on that coming to you in the next week or so, because there's a lot to unpack. I think it's unfortunate that the opportunity to realign the accredited investor process to reflect the knowledge that people have. So just very briefly, what was proposed was that a knowledge-based test would would be used in place of the current accreditation process, which for the most part is self-accredited anyway, but a knowledge-based test. So in other words, if you were knowledgeable enough about the investments that you were getting into and understood the risks and the market that you're investing in, then you could effectively become an accredited investor. I think that would give very significant opportunities to broaden the market, which is only a good thing in my opinion. But unfortunately, that wasn't passed on this occasion. Hopefully, it'll come up again. But as I say, watch out for a deeper dive on those SEC changes. I think it's important for everybody in the private capital sector to understand, first of all, the implications. Secondly, how you can be compliant with those changes, and in particular, how you can do that at scale. So in particular, if you're at the retail end of the market, from an investor perspective, how are you communicating it? How are you ensuring that you're compliant? We can help you with that, I should say, at Asset Class. So take a look at assetclass.com. We provide a range of tools for investor relations management, really embedding in your process compliance with those standards. So more on that to come, but yeah, interesting to see those developments. The other thing that's great to see, I mentioned in the last few vlogs, the slow period of August, which it's good. It's a pressure release valve for many people to get out on vacation, but it was challenging to try and move things forward as quickly as many of us would like. We're definitely coming into a busy September. We're just 3 days in, and already I can see a significant uptick in activity with people wanting to get their plans in process for the back end of this year. So as I mentioned, new fundraisings, but also projects for re-implementing technology to address some of the challenges that companies are facing. Not just around the rules that I just mentioned, but other processes that they want to put in place. And so thankfully, we're seeing a lot of activity there, and look forward to engaging with our clients. In fact, we have a handful of go-lives coming up here in the next couple of weeks, both here in Europe and in the US. And so that's exciting to see. And congrats to the team on all the hard work there, and indeed to our clients who will benefit from those deployments. But yeah, great to see it. And here we are in the last month of the third quarter, and already seeing that uptick. So great to see it. Well, that's it for the end of another week. For those of you enjoying the long Labor Day weekend, enjoy it. I hope you feel refreshed and relaxed and ready to come back at it next week. Wherever you are in the world, have a great one, and we'll talk to you soon. Take care.